Hello, my name is Leah, and I'm a financial counselor at Purdue Federal Credit Union. Today, the topic I'd like to discuss with you is making your student loan payments during the pandemic. You may have heard a variety of information about the student loan payments during COVID-19. I'd like to discuss with you some basics to help you stay up to date on this topic. Due to COVID-19, all federal student loan payments have been suspended from March 13th to September 30th, 2020. In addition to the suspended payments, the interest rate on all federal student loans will temporarily be reduced to 0% until September 30th, 2020. This is a very helpful option for those who are currently without income or have reduced income. This will allow you relief and allow you to place funds on your necessities instead of having to make those student loan payments. For those of you who have not had a reduced income or loss of income due to the coronavirus, then the opposite is important for you to do, which is to continue making your regular payments. What is the benefit of doing that? Well, as you do that during this time of 0% interest, the full amount of your payment will be applied to principal and will help you pay down that balance faster. First of all of the interest that was accrued prior to March 13th, 2020 will be paid, then the remaining will go towards your principal balance. If you're not sure what's best for you, feel free to contact us at Purdue Federal Credit Union. As financial counselors, we do offer financial counseling to members and non-members alike, and we're happy to schedule a financial advising appointment over the phone. Thank you.